Hey, hello everyone. Thank you for joining. Welcome back. Welcome back to Trade Review. How you doing? How was your day today? I hope it was good. Today was a really good day for the Bears. People pay, people taking puts. I hope that you actually have uh, at least one opportunity to take puts today. We were ready. We were ready, right, Kevin? Targets are spot on. Targets are spot on. That's why I started with this chart. This is my 4 hour chart. And well, nothing to say. Nothing to say. So welcome, Asid, Tasnim, Patrick, Dian. Great background. Thank you. Hello, Kevin. Hello, Luis. Mr. Hans. Mr. Hans, you didn't take anything, right? Like I was reading your post. Uh not nothing. You didn't like nothing. Hello Max. Hello Shoki. Hello Luke. What's up? Hey Lilia. Hello Alex. Global Hot. Palmavera market crash. No, brother, it didn't crash. Actually, I mean it's like a 2% retracement. That's nothing. That's nothing. Look at this. We opened 697. We went all the way to 685. 12 points. That's less than 2%. That's less than 2%. All right. Hello, Hui. Hey, Andrew. How you doing? Luis, I follow your advice and made money today. Let's go. Thank you. Thank you for your words. Congratulations there. The background on my phone. Well, actually, that's something, guys. You know, well, you know, I have a coaching business, right? We have a performance coaching business. We offer different kind of programs, and one of the exercises that I like the most is creating your own trader identity statement, right? Like, how do you see how do you see your future successful trader persona, right? Like, imagine that you are like 1 year from now, 2 years from now, or whatever time from now, and you are watching yourself as a successful trader, right? So now you need to define him. Like, is this trader a disciplined trader? Is this trader someone who plans his sessions? Is it a patient trader? Is it a calm trader? Is it a momentum trader? Is it a trader that like executes his edge systematically or by heart? So you need to define this trader, right? And once you define this trader, you have your trader identity, right? So you have your new trader identity. And the good thing about this, it's identifying the gaps between the actual trader and the future trader that you want to become, right? And once you have that clear, you can take everything as a plan, right? So, okay, well, I need to work on my preparation. I need to work on my emotion management. I need to work on my execution. I need to work on, I don't know, like on developing my edge, right? So once you start having your gaps identified, you make them projects, right? You turn them into goals. So one way to remind me the trader that I want to become, it's having my trader identity statement right in my phone. So it's a daily reminder of what I want to become, right? So that's why I started this new exercise, and I recommended some of my students to actually create a background for their phones so they can like take a look every day, several times a day, their trader identity, and keep it fresh. So if you like it, you just go to Grok or ChatGPT or Nano Banana or whatever AI you want to use, and ask it like, help me create mine. It's an iPhone. I'm an Apple Apple guy, Apple user. um so I just asked it like, help me create like an image for my iPhone background, with, like something trading related, some charts or a trading station, and this statement. And just I just dropped my statement, and it takes like 10 seconds, right? So it's something that you can do. uh, uh, One of you guys asked me for my image. I can certainly share my background, but it will be better, even better, if you do this exercise, right? First, create your trader identity statement, and then create your background, right? So I can share mine. That it's yours. If you want it, just send me an email to neto at tradingperformancecoach.com, and I will reply with the image. But I will suggest you create your own, right? But again, I'm willing to share mine anytime. Don't worry. Uh, Soleado, what's up? TM, getting better. Just need to learn how to hold. Hard to do with small account. Positive, but could have been much better. Hello, Stephanie. Hello, bits and pieces. Hello, Dennis. 1,000% return? No, I failed you guys. I failed you. Hello, Peters. I think you mean someone else. I had a win today. Oh, I'm sorry, Mr. Hans. Yeah, someone on the mastermind community posted that some nothing like to me, something like that. I thought it was you. Sorry. What's up, Dave? AI help me become Neto. Hello, Tocayo. Another Tocayo. Now we are a few Robertos on the community. Hey, DC, what's up, brother? Do you have Instagram? I don't have like a trading related Instagram. My personal Instagram is first boring. Second, it looks like it's it's an Instagram for my kids. But I'm on the process. I actually have like one Instagram profile for the coaching business. I just still don't start, like posting things. I'm gonna share it with you guys in the next weeks. Don't worry. Oh, it was Burns. Yeah. That yes, you're right. It was Burns. Hello, Jeff. All right, guys. So I wanted to show you first this 4 hour chart. This 4 hour chart on SPY, and I just want you to understand how key levels work, right? Because this is one of the most frequent questions I receive. And Neto, how do you know how to hold your positions? How do you know where are the liquidity levels? How do you know where it should be, like bouncing or rejecting or whatever, right? So it's really easy. I mean, zoom out, look left, and look for these patterns, right? I mean, not these patterns. I mean, where is this price rejecting, bouncing? Where are the line? Where are the areas of the chart where you have a lot of touches, right? So right here, 685. Look at this. It was like a huge pivot a few months ago, 2 months ago. And then it was a very it was a very strong key level here with when we had this gap down, and then it tried to actually reclaim this 685, but it rejected, so it went even lower. So then what is the next key level? Well, here this demand zone, this area was used as support. And look at how many touches here, 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 here. And then the next one is this one here. I mean, where it rejected these previous all-time highs around 689, rejected here, rejected here, rejected here, rejected here, use a support, consolidation here, and look at this. It's now being used as support. And then what is the next key level? Well, these previous all-time highs. It's rejection here, support here, support here. So it's using as resistance today, right? This is gonna be our intraday pivot, right? So as you can see here, guys, I mean, there's no secret science on key levels. There's no secret science on key levels. These are my higher time frame areas. As you can see, there are not lines. They are more like areas. And what I do is then after this 4-hour or daily chart, I then come to the 15-minute chart. All right. I use the 15-minute chart. To start creating a narrative, right? So what are the key levels? What are the most frequently visited points on my chart? 695 here, 693 here. Look at this. It was a pivot several days here. Look at this. This key level can actually come all the way to here, right? And it's still the same. I'm just trying, to not having like too long lines, but it's the same here. So it was support here, support here, support here, resistance here, support here, support here. So we broke this key level, and then this is the huge drop, and it's the same thing every single day. So I know if you're starting charting by yourself right now, it's like this is foreign language for you, right? This you need help, you need validation from other traders, you need validation from other charts. That's fine, guys, but at least start trying your own key levels. All right, start trying identifying where price is actually reacting the way you like, reacting the way you expect, right? So for example, here today, well, this was the pivot from yesterday. This was the support and turned into resistance, but there was a good key level. I mean, if I pull this key level all the way to this previous high, look at this. It's the exact same key level, 696. All right. So again, this is how I do it. I know at the beginning you are gonna struggle identifying these key levels. You are gonna struggle, having conviction on your key levels. But you need to start now. You need to start doing it now. Why? Because this is another thing, right? The way I trade dictates how I draw key levels. Why is that? Well, I'm always looking for these points to be broken, right? To be broken. So once I have confirmation of a break of any of these key levels, then I'm looking for the next liquidity level. What is the next liquidity level? Well, the next support or resistance area, right? So that's how simple I play this. I for real, I don't have like a secret system on how to draw key levels. No, it's just looking at the chart, and I mean, I don't draw key levels on the 1 minute, right? I draw my key levels on the 15 minute, on the 1 hour, on the 4 hour. So go to the higher time frame, and well, when I talk to swing traders and I tell them the 1 hour chart, it's the higher time frame for me. They just love. They just love, right? they make jokes about me, but well, it's a different game, right? I mean, I'm looking for these intraday key levels, so it's a different game. So they may be looking only at the daily chart, the weekly chart. We are looking to the 15-minute chart, the 1 hour chart, but that's how we play, right? So there's no right or wrong way to look at charts. It depends on how do you play. I play the break and retest on the 1 minute. So the narrative that I'm always looking is the narrative on the 15 minute. If I go on a higher time frame, for example, if I'm trying to get my entries and exits on the 1 minute using the daily chart, guys, I'm gonna be lost. I'm gonna be lost because I mean there's well, well, maybe you do that, but my edge is not on waiting, like going from previous highs to previous lows or something like that. So start charting by yourself. Come here, validate your key levels. If you have a key level like very different to what I have or to what you see with your coaches or your mentors or your trading partners, ask questions, right? Like, hey, why you don't have like this key level here? And maybe it's like, oh well, it's because it was so close of this key level, and you got it right. It's just like you are drawing differently your key level. So but start doing it by yourself, guys, because the more you start drawing your own key levels and the more you have practice, the more accurate that your plays are gonna be, and that it's gonna bring us conviction on your plays, right? It's gonna, yeah, that is gonna bring conviction to your edge. So but you need to start now. Don't wait just to copy key levels from others. All right. um Hey Fred, hi Neto, no trade for me. SPY is too brutal. Yeah. All right. So that was some words about like how to draw key levels and how to use the like the higher time frame for drawing key levels. So let's go to today. All right. So for all the people that were waiting 1000% trade, I'm sorry guys, I failed you. I got this one here. Let me show you. So I was first I was very bearish coming into the open because why? Because the pre-market was rejecting previous day high. So for me that was an indication of being inside, like an inside day, right? Like inside candle. It will be just like struggling to break the previous day high, and it's gonna be just ranging inside the previous day range. But then look at this. Then after a few rejections of this 697.30, that was the previous all-time highs on the extended hours. All right. So after watching that rejection, all right, after watching that rejection, I was like, oh well, I mean, now we're talking business. I mean, business for the bears, right? And then with the market opening right here, I watched that we couldn't hold the pre-market low, and that was exactly my trigger to be on the edge of my chair. I was looking this, and look at this. I actually took my trade 941. I know, guys, that I'm always telling you wait at least 10-15 minutes, but this was super obvious, right? This was super obvious. Rejection of previous day high, rejection of previous all-time highs, failing to hold pre-market low. So that was super obvious here. So after this break, I said like, well, I mean, I already waited 10 minutes and this thing looks like it wants to sweep the previous day low. So I opened my position here, not with great expectation for being honest. My first target was something like here. All right. It was a 1 to 2.5 risk reward ratio trade. And I was like, okay, well, I'm taking 1/4 my position here. So I took 1/4 my position here. Right here, it was like 35-40%. All right, 35-40%. And then I said like, okay, well, this thing actually broke it like crazy. So my next stream was on this candle here when we broke 693.50, and that was 1 to 4 risk reward. I took half my position. So I was 3/4 out of my position right here with something like 80%. And then when we broke this key level here, 693, I was like, oh come on, this is just too much. This is great. And I got like 10% here on these candles here with the 115%. And then I cut my position with this candle here. And you will say like, why, Neto? I mean, this is market structure is still intact. Why you are like cutting it here? Well, I already had like 100% total return on my trade, right? It was 946. Guys, thank God I've been having a lot of work. So I'm sending emails. I'm creating a campaign. I'm doing some stuff from my business. So I was like, come on, it's just like 15 minutes into the market. I already have a 100%. This is reclaiming 693.50. It actually bounced right here. 692.50 was the pivot for me. That was like my very last target for me today. Why? Because if you use the volume by price month to date, you will see. So 692.50 was like my very last target. So I said like, okay, well, this candle, I don't like this candle. I already had like only 10 or 15% of my trade right here. This candle retracement went all the way to like 70%. And I said like, okay, well, 70% is still really good. So I cut my trade on this candle here. I said goodbye to my fellow trader partners. And I just closed my broker. And when I was saying goodbye, this started to develop. And when I watched this bounce here, 692.50, I said like, okay, well, I was not wrong with my idea. So maybe the move is over. And I closed my broker. I went to take breakfast with my wife. I just went for my coffee and I detached from my session, right? I detached from my session because that's exactly what trading is for, right? Like, freedom. So after a real nice first trade, I was like, okay, well, that's over for me. I prefer to take advantage of the day, and that's it. So I closed my trade here. So I'm sorry, guys, it's not a 1000%, but it's still a good one. 115%. My very best contracts on this candle. Yeah, just a little bit better than this screenshot. But that was a very clear entry, right? Like the break, displacement, retest of below pre-market low, below the 5-minute opening range low, below the previous day close. So for me, that was this trade was like very, very easy to spot. Then, Neto, I was shy taking this trade. For me, it was not enough displacement. For me, it was not enough weakness on the price action. Okay. The second and the easiest entry here, it's this one here, all right? This second trade here, it was the break, huge displacement, and great retest and reaction on previous day low. This 693.94, that's previous day low, and that was the actual move, right? If you took this trade, I think you got like 200% at least. I mean, if you went all the way to 690. And if you waited, look at this. I mean, it actually went to 685, right? Yeah, 685. So this second trade, the break and retest of the previous day low, was the easiest to spot and was the juiciest to take. And then, well, a few other trades here. After this move, and that's what people ask me. After this move, I mean, we opened 696.50. We are right here, 690. After 1% drop, it's Neto. Will you take this trade? Probably not, guys. For being honest, probably not. But it was a really nice rejection of this previous week high at this key level on 696, let's say 691. So nice rejections here, one rejection here, two, three, four, five, a lot of rejections here on this key level 691. So if you took this trade here, come on, look at this, 690, yeah, 691 to 685. That was a crazy trade. So guys, I'm reading your comments. What did you take today? Luis, that was exactly my trigger, 941 rejection. Good. That's great, Luis. Did you take same day expiration or did you take something different? On that first entry, did you take partial? Yes, I just explained. Mr. Hans, Neto, can you show your settings from the anchored volume profile tool? Anchored volume profile. Settings. That's it. I'm going through this slowly so you can go back to the recording and take a look, all right? Luis, same day expiration. Great. Declan, where is the displacement of the first trade? It looked like consolidation to me. Yes, but it's below. It's very small displacement here. It actually, look at this. It actually never touched the 5-minute opening range low. Can you see? There's a small gap here. That's why I waited for this candle to actually went below all these candles here. All right. So yes, there's very small displacement here. But well, you know what I do when taking puts. Bits and pieces, I took the trade at 1050. 1050. 1050. This one here, you took this move to the downside. Neto, how do you make the gray blocks? I just use this rectangle. Mr. Hans, I did nearly the same trade like you on ES. Good job, Peters. Good job. Max, I took 958 until 958. 958 here. All right, that was a great trade. All the way to 685. Wow. That was great, Max. AGMBA, that's Andrew, right? How do you assess the realistic potential for a trade and therefore the risk reward? I understand where to place the stop, but how do you know or have confidence the price will reach the targets? Well, that's just experience on the tape reading. Well, it's experience on the tape reading and you know, like identifying the price action, right? I mean, if like this consolidation here, just as Declan asked, this consolidation here has a lot of context. Failing to reclaim previous day high, all right, failing to hold pre-market low, all right, failing to hold 696. So this consolidation here, yes, I know it looks like consolidation, but this is actually just consolidation for the next leg down, right? Played safe today, no trade, that's good. Jeff, 957, wow, that was great. Aniket, hi Neto, took the first trade idea. For me, even though there was not an exact retest, the 941 candle confirmed strength to the downside, or weakness, right? Weakness to the downside. That was my confirmation, held till previous day low and beyond. That was a great trade. Congratulations there, Aniket. It was a break and retest 687. $687.16. Okay, a previous low here. All right, that was good. That was very good. All right, congratulations, guys. So yeah, I mean today there's not too much to actually discuss or analyze because I mean in hindsight it was like a very easy day, right? Like level to level. Even for example, I mean I already journaled this trade and I was hesitant on journaling if I wasn't reading the price action well. But I mean, my plan was something like this, right? My plan was something like this. So this 100%, that was, I mean, that was even better than my plan. 290, 250, that was my last target. So I actually got a lot of contracts here on this 690, 250. So I follow my plan. So that's why I didn't journal like I missed this move. This move wasn't part of my plan. So that's exactly something that you should do. Also, not sure who asked, but how do you know how much it can move? Well, there's the average true range, so you can kind of expect a range or a move, right? Lilia, I took 950. That was great. Paper trading. It was a glitch on the platform. Okay. Good luck, Dave. I would like your opinion on this. I did a risky trade and time the SPY bottom 685 call to based on what, Dave? I mean, yeah, I mean, I understand the risky, the risky trade, but what was, I mean, why you took that decision? I mean, what you were looking at there? Joe Gold, getting slippage on market orders. You don't have any slippage. I don't know if I have slippage. I mean, I just use market orders because I want to get in my full position. Orlando 950. That was a great entry. Previous day low retest. Yeah, the second trade. Congratulations, guys. AGMGA does a call around 12 make sense? I don't know, guys. I mean, I don't trade. I don't trade at that time. What I did. I did something. Wait a minute. Oh, here it is. What did you say? 12? Call 1202. Um, what? I mean, what was your idea? I mean, what kind of trade is this? Based on the break of the resistance it broke through, like this one here. Okay, it okay, like kind of a breakout trade. Yeah, I think after it reclaimed this 687, it's having market structure to the upside. So yeah, it was. I mean, it was a decent trade, but it was a breakout trade. Ah, you're very welcome, Tassim. That's exactly why I use market orders, because when I want to get in, it's a guarantee, right? And when I want to get out, that's also a guarantee. Neto, there's some slippage. Well, I don't know, maybe 1 or 2 cents. I mean, I'm trading SPY, right? So what kind of slippage can be like 1 or 2 cents, 4 cents? I mean I don't see. I don't see that's like really important. All right, let's go to QQQ. QQQ has fewer or less clear opportunities to the downside. For example, this one here, I want to show you where this was. All right, right this, right here. Oh, what happened here? Okay, right here. This QQQ was the break and retest of this order block here. This order block here, and I will enter until the break of this 628.74. All right, so I will enter here. And what was going on here on SPY? Well, it was also, like going down or going lower, right? So do you remember when I'm trading QQQ, I'm watching SPY. When I'm trading SPY, I'm not watching anything. But this will be like my first trade opportunity on QQQ because SPY was actually doing something similar. And then after we broke the previous week high, this 625.40, you had displacement, 1 rejection, 2 rejections, 3 rejections, and this candle here was rejecting harder than all the others. So I will open my position here, 10.13, and I will be aiming first to this 621, right? 621. That was a 123.5 risk reward rate to trade, but this actually went even lower, right? And then that was all that I watched on QQQ. Anyone took a trade on QQQ? Shoki paper trader QQQ puts 957. 957 here. Okay, well, this the break of this double bottom here, that was a good trade. Jason, no. Randall, what did you do? Randall, did you do? Give me 1 second. My friend Randall did. No, he did SPY. Congratulations there, Randall. That was a nice trade. Hard to trade QQQ today. Yeah, and that's the other thing, right? Like QQQ has been, I mean, we had 3 earning reports yesterday. So it's, QQQ, it's more like tech heavy. So yeah, I think QQQ needed to just chill or cool down a bit today. Let's see. All right. Give me 1 second, guys. Let's go to IWM for popular request. Right? So there's something here. This is not the break and retest, but this was a very nice. This was a very nice head and shoulders, right? This was a very nice head and shoulders, and the neckline of this head and shoulders was the 5-minute opening range low. So I really like this trade. I was watching this later on the day. I watched that one friend of mine on the Walls of Wealth. He took this trade, so he made like 300%, right? It was crazy. But this was the like the clearest trade, right? This was textbook break, displacement, retest of previous day low, and because we already took this liquidity here of 261.66, market structure is to the downside. A lot of momentum with these huge rejections here on previous day low. The most obvious target was this previous week low. The next one is this 216.19. That's a key level on the daily chart, and I think that's it. I think that's it, right? I'm still in the process of learning IWM again, so let's see what happened here. And then I'm gonna give you a tour over the tech names, guys. For being honest, there's not too much to explain. This is the break and retest of low of the day, and this 254 something 5-minute opening range low. This is the break and retest of the pre-market low. This is the break and retest of the previous day low. This is the break and retest of low of the day in alignment with this 248 key level on the daily chart. So again, nothing too much to explain here on AMD. Those, all of them, they were like really clear. So yeah, let's go to the next one. Amazon, again, break and retest of this previous day low, 241.53. And it was the 5-minute opening range low, the rejection of the 5-minute opening range low, the low of the day, break of this pre-market low. I will be opening my position here, next key level. I will be, look, for example, here on Amazon, I will be looking for the whole numbers first. All right, like 239. It was still a 1 to 2 reward rate to trade, maybe something like this. Almost 1 to 5, almost 1 to 2.5. Then the next key level, it's this one here, this 238. That's a key level on the daily chart. So again, super easy. Nvidia, look at this. This is the break displacement and retest of previous day low, 189.84. Nice rejections here. I think this stop loss is kind of, it should be something like here on the previous day low, right? So look at this, all the way to 187, let's say to the key level. It was a 1 to 3.3 reward. That was a very, very good one. All right, that was a very, very good one. If you miss this opportunity here, well, maybe you can have something like this, right? This is actually a lower risk because you may have your stop loss to the previous week high, and you will have kind of the same targets. So this will be like a better trade, right? But this was a good entry. This was a good entry. All right. What about Tesla? Tesla, same thing. Break and retest 5-minute opening range low. And then break and retest of this low of the day. Low of the day. And well, again, today, I think today was kind of easy, right? It was kind of easy. Guys, if you take a look to our weekly plans, we were waiting for this. So that's exactly what we need to do. Keep preparing, keep creating our trading plans, and keep following our trading plans, right? So you position yourself to take advantage of these moves. Why? Because we were expecting this move. I mean, we said until we don't break 695 and then 700, I mean, there's no huge momentum. I mean, it's a slow grind on the daily, but there's no huge momentum. So what can happen here? Well, it can happen that price needs to go lower, looking for more liquidity for the next leg up. I mean, I'm not saying today is the day one of the market crash. No, that's absolutely not what I'm saying. But look at this. What happened here? This is super clear, right? This is super clear. What happened here? We are not breaking with enough strength the 695 area here. We never hit 700. So what happened here? Price needs to get more liquidity for the next leg up. So let's see what happened this week. Let's see what happened tomorrow. Let's see what happened next week. But I think, and this is just my things, we are gonna be between 690 and 697 for some days. So it's gonna start consolidate on this area. That's what I think. And once price builds enough liquidity, it's gonna take the next leg to the upside. But in my opinion, it's gonna be bouncing on this area for some days next week. let's see what happened. Let's see what happened. We will be doing the same thing, drawing our key levels, identifying the relevant areas of support and resistance. We will be managing our risk the way we do. And well, again, we need to position ourselves to take advantage of the moves. Whatever you are looking now, a move higher or a move lower, you just be ready. Don't marry a bias. As you can see here, that there is a lot of people like, oh, well, today we're going to break 700. Guys, don't marry a bias, especially if you are day trading, same week expiration. There's 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 no edge marrying a bias, right? There's no edge marrying a bias. So come to the day with your own trading plan. Come to the day with your own trading ideas, and manage risk, and just watch price action. And if price doesn't want to go where you plan, just adapt and be flexible with your trading plans, right? But you need to adapt fast, right? That's the thing with options. All right. So guys, just as I explained today, if you are on this moment of your training career where you already have an edge, or you are close to have a defined edge, you now have a few strategies, and you just need a small push for consistency, for trading habits, the right trader mindset, and you think you may take advantage of some tools and some best practices, and like experience from other traders. Remember tradingperformancecoach.com. I have a few different programs, and well, that might be the only thing that you need. Most of the traders I work with, they don't need more technical tools. They don't need more strategies. They don't need more setups. They just need, like the right mindset and the right tools to actually stick to their playbook and be consistent. So if you are interested, guys, just let me know. Go to the website, send me a message there. There's a contact form there, and I will be pleased to contact you and like start talking about how we can turn your career and create that consistency that you need. So guys, thank you very much for joining. Remember, like the video, subscribe to the channel, and I will see you tomorrow. Bye.